Good morning, Mr. Mohan.
Good morning, Shruti.
I'm very glad to have you here with us today. We are going to have a short conversation where we are going to understand how SubhShanti Wealth has made any difference in your life, in your goals that you want to achieve in your life, in your family life, in your plannings of, say, holidays or homes or retirements, the big ticket expense that we all
Yes.
have. So, and how Sandeep has helped form your thoughts and processes around money.
Okay.
So I have a few questions lined up. We'll start
Yes.
right away, I guess.
Yes.
As a CFO of a large MNC and with deep financial acumen, why did you choose to delegate your personal wealth planning to Shubh Shanti Wealth in the very first place?
Okay. So I got introduced to Sandeep way back almost 12, 13 years back. So he met me. So prior to that, I had few bad experiences with some of the wealth. I don't talk them about wealth managers. They asked me to invest in some of the things. I'll be busy in my regular activities day in and day out.
Of course.
So they are not given a transparent picture how it is going to be my investments. They give a wrong picture, which has a lot of cost of those funds. So slowly I dislike whenever whoever comes and explains me. So similarly, Sandeep, we met, we had a good interaction with him. So it was a long conversation. So he explained a lot about all the investments which will give a good return, and he told at least a minimum yield of 12% you can explain. And the good part is Sandeep will never chase their clients. So he'll explain you to that extent only. He will close there. He will explain and close. So some of the things like he explained is investing on land, building, gold will yield lower this thing. So I went back home with my cousins, my brothers. I discussed that topic and we were laughing. No, it is just a business tactic. What Sandeep is telling. So how can he explain me? Buying a property in Nariman Point, investing in an SIP will yield more.
Okay.
So I disagreed. Same way, I felt when I was discussing with other family members, cousins, everyone. Okay, this is all wealth managers tactics. So definitely, real estate and other things are good. So that is how it started. It took some time for me. So the first step when I took is I already invested in debt funds, real estate.
I see.
Real estate definitely it gives a good returns.
Okay.
But what I felt is holding that in our name, we need to keep watch. So many regulations, government taking over for various road widening. There are multiple complex. Like we don't know. Like after keeping with us all the documents, also somebody else will claim. So these are the too many complications are
with real estate.
Real estate.
Okay.
So gold also, like I purchased at 33,000. I spent 3,30,000. Exactly, I don't remember, but I after meeting Sandeep.
Okay.
So it took 5 years. After that, it came back to 26,000, 27,000. In order to get back my money to 3,30,000 for 100 grams, it took 5 to 6 years.
Oh.
This was another bad experience. So then slowly I realized and started investing around with 10,000.
Okay.
So I was looking 10 to 15, I changed. Then I saw the results after a couple of years. Then I changed. Immediately after 1 year, I changed it to 20,000.
Okay.
20,000. Then I saw another year, I changed it to 30,000. Slowly I started explaining this journey with others. Okay, it looks like it is giving good. Another point is if I keep FDs, I need end up paying my tax return rate will be at whatever higher tax bracket I am into, which is 35% roughly, including if I add up surcharge and other things, 35 plus. So it doesn't make any sense. Like investing
Taxes are very high in FD.
7% FD yield will be 7.5 max.
Okay.
So on that again I have to pay 35% no exemption, and here at least 1 lakh capital gains exemption will be there, and 10% was, now it is 12.5. At that point of time it is 10%. I gave a deep thinking, okay, holding a real estate, even a flat, in order to have a flat also we need to keep looking for a tenant, maintenance, some
True.
problems keeps coming, right?
True.
There are multiple problems, okay. I saw one of the flat, in couple of years, 3 tenants got changed.
Okay.
For some reasons,
Okay.
they transfer. So every time I have to get painted, some
Right.
issues, damages will be there. And what is the rate of return on the investment? Okay, there is an appreciation in the real estate. So, about return when it comes to the rental property, it will be anywhere in India, it will be between 3 and 4%, not beyond that.
Okay.
So these are the things which slowly I realized, okay, what Sandeep has told me is all correct. Okay. So then started slowly, like from 10,000 I've increased, I started increasing the amount to 2 lakhs per month. I've started on my daughter, my wife's name also. Even
Okay.
the mistake what I have done, I thought, okay, let others shouldn't do. So slowly, whomever I meet, the youngsters, similarly my daughter, my brother, sons, children, my elder brother, grandchildren, similarly other cousins, all irrespective whomever I meet, I always tell them like, okay, I started around 40 when I was 40. Should I have started early, much early in the beginning of the career, it would have been much difference. Even now, like, so Sandeep did a financial analysis of my goals.
Okay.
So there was some target by the age I reached 60.
Okay.
But now I'm very confident I'll have a larger portfolio than what we planned in the beginning of the career.
Oh, that's lovely. So you're not only going to meet your goal, you're going to surpass your goal.
Yes, surpass the goal, and like a lot of times the other benefit is SubhShanti, the whole team. Like I asked Sandeep, like it should be reviewed on a regular basis. So a lot of times they switch the funds also all of a sudden. Okay, they give a call, Mohan, we need to switch from this funds to this fund. That also helped me a lot.
Okay.
So the initial conversation which I told was our understanding was 12%.
Okay.
So, but at certain point it touched, XIRR has touched 26+%, which is unimaginable. Okay. So the market,
which I guess gold, real estate, and similar.
Nothing will give. Okay.
That's amazing.
I know it's an unrealistic. Maybe it will not be there for a longer term, but Sandeep has told me a few years back, Mohan, if Indian economy is growing, it will touch 80,000. Whatever he told, it happened like over a period of time. So it may move up, and he also explained, see, the market may fall because of the various reasons like external conflicts between the countries. So many other issues. Similarly, like Ukraine, Russia, and other things came in, and market has fallen to a large extent. But even at that point of time, when I look at my portfolio, it has dropped a lot, few lakhs.
Okay.
But percentage-wise, still it is between 17 and 18%, which is much more than what I expected. Which is, we thought of 12% plus. Okay.
Right.
In the meantime, a lot of times, what I did is, like in the beginning, and Sandeep used to tell me like real estate, gold. So I had some friend has forwarded me gold for last 100 years. Like you see, there will be a lot of communication in the WhatsApp, right?
Yes, of course.
So similarly, they shared me 100 years gold prices. So when it comes to the gold, I thought, okay, again Sandeep is wrong, but okay, I understood we need to look into a longer horizon, timelines. So for example, if you see last couple of years back and now it's almost double, which is a high returns.
True.
But if you look 10 to 15 years, if you catch hold of 10 to 15 years,
Okay.
then and see. I've done some 15 years, different blocks I've taken. It is giving between 7 and 8% the returns.
Okay.
I did
Study.
yes. So
Okay.
similarly, I asked a couple of my friends, okay, some of my colleagues, they purchased land 25,000 per square yard and now it is around 75, 80,000, okay. So I always used to think, okay, we missed this opportunities, but when I sat and did my own working on the XIRR, it was between 9 and 11%.
Okay.
So similarly, the land prices, what exactly it will happen is, when the price is low, okay, it goes up all of a sudden, but after reaching certain point, see, we are not into the trading, right?
True.
The land or building, we keep it, either that is gold, land.
Once you
we
buy
are
it,
not
you keep
into a
it.
real estate commercial business.
True.
So we keep it as a fixed assets.
True.
So if you take any property, for example, where I stay, it's there for last 50 years. My father, it came.
Oh.
So initial period it gives a high yield. After reaching certain point, it will be stagnant. Maybe few points here and there, it keeps fluctuating.
Okay.
So if you look from the longer this thing period, the rate of return comes down. Once suppose say 1 lakh per square yard it reaches, it remains at that levels only. It keeps fluctuating. Small changes will be there.
So you're telling me that in real estate there is upper ceiling.
Yes.
Every real estate will reach there and then it will stay there.
From there it goes
A little
slowly.
bit.
So which will fall the yield over a period of time. The XIRR will come down.
Will come down. Okay.
So if you look all these points and looking the current scenario in the to have your wherever you are staying, to that extent it is safe. But the other properties, in order to sell whatever it is
And maintain it.
You have to be very watchful. At times,
Actively participating.
Even if you are watchful, we don't know the other side, if they are strong politically or whatever.
True.
So, thinking on those lines, if you see, this is a very simple way. Just invest, click of a button, you'll get the money any time, a couple of days.
Right.
So that's a good part. And the yield, definitely looking at growing economy. We are still a developing country, right? So over a period of time, it will give a good yield. So that is why, like couple of days back, I told my daughter, she's too young now.
Okay.
I told at least 70 to 80% of her salary should go to this, so that by 35 she'll be very comfortable in her life.
Right. So maybe this could be your message to the youngsters who are just getting into the job industry freshly out of college.
Yes.
To start your SIPs early.
Yes.
Okay. That's great. You've actually covered quite a lot of things that I wanted to know from you. But let me see. Maybe you can tell me what is it that most high income professionals, those in CXO positions and levels, what do they get wrong about money, and what advice would you like to give them?
So most of the people will go with a real estate, the high level income groups. The main reason is definitely, see, real estate, I'm not saying it is not good. It all depends. If you are into the business like buying, selling,
actively participating in the
that might give a good returns, but again, a lot of risks are there. See, for example, I purchased one property. Now, like when I went for a building construction approval, they're asking so many documents like Urban Land Sealing Act clearance, irrigation department clearance, other things. Why simply they gave the documents, it is encumbrance certificate is there in their name. So it is supposed to be like sub-register has to reject that initially when I was, but in India India, the system is not like that. The same property can register in multiple people.
Okay.
There is no control. Like that's the main reason. Okay.
I see.
So you should be well versed in the real estate. What all documents you need to check, you need to spend, and you should be very active. Then only I recommend that. So what happens is most of the people who have money, so they think real estate is one of the good opportunity, and they never work out the rate of return in the long term basis.
Right.
So they always look from short. Just now I told you, like about 10 years back, one of my colleague, I'm just giving you one example.
Sure.
I did multiple analysis similarly of the various properties. So 25,000. So it became 75,000 over a period of time. But when you listen it, okay, oh, it went up. We should have purchased at 25,000. Now it went up to 75, beyond the reach.
Okay.
But when you work out, it gives about 9 to 10% return. But for that, again, you have to do lot of time spending with the government authorities to do whatever you need. When you want to sell it also, you need to go to the broker, wait for someone coming to buy the property. And nowadays, whenever we need to buy or sell a real estate, there will be a black component and a white component. All these litigations are there.
Right.
So looking into all these factors, definitely SIPs make sense. The only thing, as a senior, definitely they must be doing a lot of CXOs or COs. They must be investing in trading and other things. But when it comes to the real estate and gold, they don't look into the rate of return.
In the longer term.
Yes, longer or.
Right. And also, like you said, there is so much problems in buying a real estate and maintaining it. Comparing it to investments in mutual funds and SIPs, which is just at a click.
Correct.
And much easier, I believe.
At a click, and you need not write. Just now I was explaining whether it is CXO, CEO, or a normal person. A salaried person, it is all taxable.
Right.
But when you really want to buy a piece of land, no one gives on a white entire amount. So certainly you need to accommodate some portion.
Right. Which becomes a challenge.
Yes, it's a big challenge. Right?
I see.
So when you want to sell also same way.
Yes, then also the black and the white components come in the picture.
That's there across.
So now I believe it's been almost a decade since you are with SubhShanti, and you are
Decade plus, yes.
A decade plus.
More than 12 years, yes.
Right. So over these years, how has Sandeep and SubhShanti helped you mold your thoughts of money, your way, how you look at money, and how you perceive money now, especially in terms of your savings?
So savings, majority of the portions now I totally forgot about FDs now.
Okay.
So, whatever it is, I'm just planning to put it in SIPs. So when it comes to Sandeep, like a lot of times he does a quarterly review of my portfolio, whatever their negative, he tries to explain me why it is doing on the negative side.
Okay.
But usually what I've noticed is if it is less than 3 years, he simply says you don't look into that.
Okay.
A minimum period, whoever wants to invest into this SIPs, in the beginning itself he will say, what is your timelines? If it is less than 3, he will always say no.
Okay.
Should be there at least for 3+ years. Okay, I've seen some of the funds what I have invested, it has become double within a no span, 1.5 year, 2 years. But he says whether it is positive or negative, you shouldn't look into those things for the first 2 years. Compound impact also, when you look on a longer timelines, the compounding impact of even 0.5 or 1% has a huge impact.
Okay. I see.
So that slowly I got realized. So now I leave it to him. I don't much look into each of the portfolio or whatever. So, but I'll have a glance on a regular basis.
Okay.
Wherever if something I'm not convinced, I'll check. We will discuss and see what needs to be done. Majority of the times, it has been taken care.
Okay. So, as a CFO, your nature of work must be such where people keep coming to you for advice. Your family people or your colleagues, your juniors, I'm sure they come to you for advice. What is it that you tell them?
So now SubhShanti should know almost 13 people from my family member are doing that. They have
That's
also
lovely.
started doing SIPs.
Okay.
So none of them were exposed to SIPs prior to that. Okay?
And they are all working professionals?
All are working
And yet they were not
professionals.
exposed to SIP by anyone else.
Anyone else.
Ah,
So slowly, when I started explaining about my experience, how it is going, so definitely they got convinced.
okay.
So that is how one by one started.
You convinced each one.
It's not convincing. I explained him about my experience.
Right.
So definitely everyone is interested to grow their portfolios, right?
True.
So some of these things also I have explained. The same I told you about 13, 14 years back, what we discussed about land, gold.
Yes.
They might, but if you look from a shorter span, similar for gold example, last 3 years it has grown up. But if you look from a longer point of view, it's not the same.
Right.
So that is how I've made a one tabular this thing and explained. Slowly they understood, and when I explained about my returns and other things.
Okay.
So they liked it and they also started it. So important thing is your funds are with you. Click of a button and you can anytime just check what is the returns coming up. So everything is transparent.
That's great. So, Mohan, I believe in the past you have also done actively trading in the stock market as well. And now you are a firm believer of long term investments, like you have been telling me. So, what difference do you find when you were doing trading, active trading, and now that you are passively doing long term investment?
So again, trading is altogether a different. It's like gambling. Like
True.
I started in the beginning of my career, almost way back 25, 30 years back.
Oh, wow.
So I myself, my brother, and we invested in one of the share which was costing 1,000 rupees at that point of time. I'm just giving you one example.
Sure, please.
Because I don't remember exactly economic times. It was Harshad Mehta's time. So
Okay.
economic times or business time. Some news was there. So it was rallying like anything. It went up to 1,000. There we bought it. So
Okay.
slowly it started crashing slowly. So we thought, okay, it'll come back because of this thing. Scams and other things, it is falling, but there was very good news in the paper that they are holding a lot of business in the pipeline, so it will go up.
Okay.
But finally, it is zero. It became zero, literally zero.
Oh.
That's one example. So what I felt when we purchased full time, we have to concentrate. Like I've seen a lot of people who are doing trading, so we keep watching that. That is one part. So
Must be tedious.
yes. When you look at like newspaper, how we do is like, okay, whatever some news comes up, based on that we buy and we look. But later I understood it's not only depends on fundamentally. Definitely fundamentally strong companies are good to be invested. But it not only depends on the fundamentals, there are multiple other factors. The decisions of the government, brokers, large size brokers,
Macro factors.
macro factors, people playing with the stocks. They keep nothing will be there, but they keep on increasing the price. All of a sudden it starts crashing. So these things is not in your hands, nor will be aware.
Right.
So you don't get a realistic picture there. So one has to be very mindful.
Okay.
companies like Tata's and other things. For example, Tata Motors, if you take recent, so Donald Trump's, it's a fundamentally strong company, but because of the tariffs, all of a sudden it got crashed. So these things are not within your hands. So
Right.
the difference is again in SIPs and other things also. Funds are invested in equities only, but there you have a fund manager. They are into, see, even though I'm a finance background person,
Yes.
I am not 100% into it, how it is going to react for the various factors in the market.
Okay.
And we need to spend full time on it, like by default, like. So I take it as a gambling. Your mind will be keep on watching those trades, how it is flowing, okay, whether it is going up, down, up,
Right.
down. So with the falls we need to add. So I thought, okay, it's not my cup of tea.
With a job, I'm sure it must be very
Well,
difficult.
yes, it becomes difficult also because it deviates your
True.
this thing.
Plays with
from-
your emotion
yes,
and
yes.
deviates your mind from your own job, which requires you to be-
There you have people who can concentrate and invest your funds. I thought I stopped it, but very rarely I keep buying unless I know if something is strong.
Right.
But there also, again, I've not seen that good return.
I see.
Yeah.
Over a longer period.
Yes.
Okay. So, as a CFO, you must be surrounded with a lot of noise, people giving you advice as well, not just taking, but there must be people giving you advice as well. How is SubhShanti or Sandeep's advice different from all these? Because you've been with them for 10 years now, so it must be different, I believe.
Yeah, so people, like couple of my colleagues, they came to me and told why we need to go with a wealth manager. We can do it on our own. We can do it Google. You'll get a lot of recommendations. They try to explain me. Let's see. Nowadays, if you Google it, what is the rate of return each fund is giving? All those things will be there. And if we do directly, it has some regular growth. When we go through a firm,
Direct plan.
that will yield 1% more. So
Right.
I compared, okay, what is your yield? So they used to give me a figure and I used to compare. Then I used to tell there is at least 4 to 5% my returns are higher. So that makes a lot of difference, like switching. It not only based on, okay, some funds must be doing good at certain point. If you don't exit at that point of time, again your returns will fall, right? So these things are taken care at SubhShanti.
Okay.
So that is how they try to maintain a good yield. So when we do on our own, those things is not possible. Suppose a good fund manager is there. If he is moving out of that, immediately there will be some impact.
True.
We will not be aware, okay, who is coming in and who is going out. So I thought, okay, what is the net impact? Is it I'm doing good when compared to the people who are doing directly? Definitely, I've seen 4 to 5% higher side in my yield.
Okay.
It's only not only my analysis. I've read it in the business line and other papers. Going through some good wealth manager will yield a good return when compared to what we do on our own.
True.
So that's what I keep explaining to the people. Go with a good wealth manager. So that will help you.
Okay. That's great. So now, for the younger generation, especially your daughters and your brother's daughters, how easy is it for you to get them on board, or is it difficult? They have some resistance, and how do you overcome those resistance from them?
So I usually see nowadays the pay packets are very high.
Okay.
So the moment they're out from the college, they try to spend. So first thing I keep telling them, okay, don't keep the funds idle, don't go to the stock markets, which may look lucrative, but I've seen a lot of people losing a lot of amount. Okay.
And your own personal experience.
Yes. Those things also I share. So basic thing is I always tell like what I lost in the beginning of my career. I told them like I started very late, have it been early, so I don't want you to lose those opportunities. So start with this. So like whomever I told within the family and close friends, they have started doing this. So for the last couple of years, even though the market is not good, so they came to me, okay, this is not doing well, and then I told like same thing. No, no, you have to wait. Now the market is low. You are in a good position, then you are getting the units at a lower price. Definitely leave it for some time. You are not in a need of money, which I also tell them this is a longer investment, longer time investment. So now they are seeing the results. So definitely, I have not seen much resistance, but whatever the points I have explained to him about the multiple options. So in order to buy, say, real estate, you need to have a used loan or your own funds, right? To make that property to purchase. Here it is not that. Whatever you have, instead of paying 9%, 10% housing loan interest and buying that, taking so much tension, start investing in this, so which will give, and you will see that it will be compounding.
True.
So they convinced and that started.
Lovely.
Yeah.
And finally, I want to know, you must be planning for retirement, for children's marriage. How has SubhShanti helped you come closer to the goal or achieve the goal?
But earlier also I have explained. So when we started the financial goal, it included all those things.
So these goals were taken care of?
Yes, education, marriage, everything. So a couple of things. I never expected my daughter will go abroad. So I've never did that projection also in my financial goal plans. And my younger daughter also, she went to a premier management school.
Okay.
Which ended up between 30 lakhs. For elder one, it is almost like 1 crore plus.
Okay.
So I have projected, but maybe 1/5 of what I would have thought, because in the US was never in my plans.
I see.
So including that, what I feel is my goal plan will be achieved much earlier than the retirement age.
Lovely. That sounds great. So, all right. I think more or less I got the answers that I was looking for all the questions. It was really lovely talking to you. And thank you so much for all the time you've given us and the insights that you've given us.
Thank you very much, and same here. It was a good association with Sandeep and his firm.
Okay.
Looking forward for a lot more years to continue with this.
I'm sure there'll be a lot more years for that. Thank you so much, Mohan.